Ajay Srivastava is Chief Executive Officer at Dimensions Corporate Finance Services. He's our market master today. Ajay, good to have you with us here. Thank you very much. I'm surprised you're still around. You're not off on your vacation.
Good morning.
End of the year.
Good morning. I tell you, when it pours, you collect the water. You don't run away from it, right? You don't put a raincoat, you don't run away. When it pours, you collect it. So I think this is one season which is just incredible, not only from the investment side, but from the corporate, our banking side, investment banking side. It's just amazing what the year has come out to be, I think. And yes, we will try to run away, but well,
no. I was just joking, Ajay. Please stay. We're all here, and we're all going to be here. So please stay.
If we got to be here for this year in the season, silly season, then I think we got a problem. We need to enjoy the money, my friend, before it evaporates. It's, paper money.
I agree with you. I mean, not just this year, right? Every year. I mean, towards the end of the year is when you can actually take some time off. But season's greetings to you, Ajay. What's the big plan for Christmas and New Year this time?
I think the big plan is to just relax, count your earning, and stay in a place where nobody can find you.
Well, I'm going to say it in...
Sorry?
I'm saying I'm going to in a full filmy style, we're going to find you.
Believe me, I found a place where nobody can find. Where there's no connection, there is nothing there at all.
Tell us also, so we can also run there.
I'm telling you, it's in the middle of Kerala, okay, and no connection comes there.
Wow.
Absolutely blissful.
Kerala.
Is it in one of Prashant's plots? I heard that Prashant has some lovely property. Are you guys going together?
A lot of market men keep talking about these plots that Prashant has.
We never get invited.
We have not got invited till now. Anyway, hopefully 2024.
Complete fabrication. But Ajay, talk to us about the markets a little bit. I think we should get to that as well. How are things looking? Good for more?
I think things are looking good. But what we have done in the last 2 weeks is that we have actually pruned some of our stock holdings. I think some of the stock which has gone up quite substantially may not back up with the fundamental earnings. I think, and we have analyzed that almost about 500 companies in India that are in the universe of BSC that would definitely, which were in the active universe zone, we'll take some money off some of them, not invest in some of them. So this has been kind of the last 2 weeks. Prashant, has been a time to say what we will not invest in, that is one, what we will book profits into, and what we will add on, and that's the theme. But by and large, the theme is that don't change much of philosophy of investment. The same themes continue, but definitely prune your expenditure, your investments into companies that perhaps have run too far ahead of themselves. So I think this has been a kind of a last 2 weeks has been of pruning down more than adding up.
Okay, well, there is a statement that's come from Sonia, so we'll get to that in a bit. Sony's statement has come to CNBC-TV18. So Mangalam will be here with us to just give us an update on that. Z Entertainment now is down almost about 2.5%. So we'll come to that in a bit. But before that, Ajay, this year we were just chatting about it. This year has belonged to some of the laggards, right? I mean, Zomato, for example, it's come into its own this year. Profitability has come back in a big way. The stock has doubled. But do you see this as a structural up move in some of these platform companies?
Of course, it is a structural up move, Sonia, for three reasons. One, the large mass of Indian investors which doubted such companies and said, they're the cash burners and they're not going to do anything at all. So it's kind of now people are chasing the stock because lots of portfolios didn't have it, didn't believe in it. We must understand that we have a legacy of investors who are, who can understand steel, cement, but don't relate to these companies, partly for a valid reason that they couldn't understand loss, etc. But in terms of business proposition, absolutely amazing. In terms of monopoly status, it's a tick mark in the boxes. You can't get a competition to come in apart from, say, Zomato and Swiggy. I'm not saying invest either, but I'm just saying the fact that you cannot get competition in this sector in a hurry at this point of time. You've seen how Nykaa has taken the lead in the fashion business and how Reliance, a physical, one would say company of the old type, is trying to catch up with them. So it's not going to be easy. But, and as they always say, and what happened in the political landscape, you need to change your portfolio. You saw what happened to the two chief ministers, right? New guys came on board. So if your portfolio is not carrying new guys, I think you're not going to do service to your portfolio in the next 2-3 years. It's ridiculous to have the same old companies in your portfolio. The world has changed. Indian market has given you 300 new companies in the last 2 years. You can pick and choose which one you like. But some of these, which have got real scale now, they are phenomenal and they're going to go higher. Just, think of the scenario 5 years down the line, this company is serving, instead of 130 million customers, it serves 400 million customers. The scale and magnitude of Indian population is just amazing, absolutely. So I would say, if you don't have it, take the new age companies in your portfolio and just structure yourself to believe that you need to get 30-35% of your portfolio in new companies, new areas which have come up. Look at watch retailing. We never knew it would happen. The company's done phenomenal. Airport lounges, phenomenal, absolutely. You know, the new sectors coming up. So I think new age, I would say, define it a little beyond just the cash burning companies, but also saying some of the new sectors have opened up which are never available to Indian investors. So I think your portfolio, definitely, we have said to our team very clearly, 35% of a portfolio has to be in companies which are listed in the last 3 years.
All right. Ajay, very quickly, if you could tell us, what would be your asset allocation as of now? Personally, I'm keeping my SIPs going, but I'm also, buying some gold sovereign bonds as well. But I'm buying it for a longer duration. As of now, approaching into 2024, what would your allocation be, say, into equities, gold, real estate?
My dear friend, look at my hair and your hair, right? So my concept of life is very different than your concept of life. At this point of time, we are enjoying life by playing literally, okay, to be fair to us, honestly, we have fair amount of real estate investment at this point of time. So if you look at, the allocation to real estate continues to grow at this point of time. So 30% or 40% of the money which we make, it actually goes back to real estate at this point of time. Balance, we're done with gold. I think gold, we got whatever we have. I think it's all equity at this point of time. There's reasonable amount allocated to gilt fund, but not such a significant to make a merit a mention. But there's a reasonable amount now parked in gilt funds to hopefully ride the next wave and give us liquidity as we need in equity markets.
Okay. Luckily, you only spoke about the hairstyle. I was worried about you get into the bank account, then I would be in trouble.
Ajay is still with us. Ajay, any thoughts? Z, you heard Mangalam outline what's happening here.
I think it's a greatly avoidable stock. There's so many better things happening there. And, it's a binary. If it merges and if the leadership is same from Z, then why would I buy even this combined entity? It's all about buying leadership. This is one company where if the transition happens from Z leadership to Sony and they combine, it's certainly not on my buy list.
Okay, it's certainly not on your buy list. What is on your buy list now? Where are your sights set? Because there's so much happening, right? I mean, there are renewable energy companies, power companies coming back in a big way. There's defense, there are commodity stocks, autos are coming back. So where do you see alpha being generated now over the next, say, 12 to 18 months?
See, I think the alpha, in our view, would come really from the stocks being driven at the mutual fund level at this point of time. And that alpha would come perhaps again back to the same. That's why I said, Sonia, the thesis of investment does not change in India, given what scenario. Whether it's a defense, whether it's a railways, whether it is a capital goods, I think that's the more important one. The thesis remains that you stick to these companies, and whenever you get a correction, you just go into these companies. The retail is out at the point in time. The only one which did a good job this year and which is out of our favor at this point in time is pharma, because that is too expensive given where the valuations are and what we are seeing in the US market at this point of time, whether it's a biotech sector, whether it's a pharma sector, all under pressure at this point of time. So therefore, pharma definitely is out. So that's why I said important to see what you keep out of it. Retail is out of our portfolios, except for one large company, that's it. But then focus remains where it was earlier. Nothing new. Unfortunately, nothing new for the investors to say, what new can come. The only thing we're ensuring is wherever we see government policies impacting our share price, like what you saw in sugar, we were zero in sugar. We have kept our list and says these sectors we want to keep away because one move, it wipes out your net worth. You hate it when on a day when the market goes up, if you are a sugar company share owner, you see your stock price 7%. It's not 7%. You feel miserable no matter what you made in another portfolio. And I think this is one year where you don't want to be miserable when the market is giving you 30% returns.
Okay, since we're talking themes, right, there's also this artificial intelligence theme that everyone is playing, and we just had a word with the management of Happiest Minds. They're doing something in generative AI. There's Zensar Tech, Affle, Cyient, and stocks like Cyient are sitting at fresh highs. Is this a theme that you would play?
See, this theme we have played in the US market. It's worked very well, wonderfully well. So I would still believe that if you want to play this kind of theme, you are best advised to put in the US market because they're much better companies, much smarter companies. And they give you, you're talking alpha returns. Look at what happened to the largest 5 companies there, tech companies. That's the real alpha coming out there. So, if anything going to happen greatly to Indian companies, they will lead the charge again. So I would still believe that the AI technologies, etc., before they become money spinner for Indian companies, you'll get a better way from the US companies. Indian companies also have a legacy business. So yes, incrementally AI business or whatever it comes to them. And it's all confusing. What is AI? What is generative? What will classify? What is digital? It's a muddle at this point of time. But what we do not see, and I think that's the important part, is increased spends out of the US into the technology sector. That's why Indian companies. That's not happening. Same for pharma. That's not happening. So I think one would be advised that if you want to play this theme, US gives you so many more options than India. Play it there. India is going to derive a 5% or benefit from it, nothing more. 95% is going to come in the US. So better focus your money there than focus in India.
Okay, Ajay, thank you very much for joining us. We wish you all the best. It's an enjoyable chat as always. And as I wrap up, I'm Googling areas with no phone connectivity in Kerala. So, so I'll message you.
I'll share with you. I'll take you when I'm not there.
All right. Okay, that's a googly. Thanks very much, Ajay. It's a pleasure having you with us here on CNBC TV18. I think